Good afternoon. Thank you very much for having us here today to talk about technology. I will keep most of my comments to the sector itself, with some remarks passing, I suppose, about the trust that we manage as part of the team strategy. The technology team at Polar is well, one of the largest in the world, certainly one of the largest in Europe. We manage around $15 billion of assets across 3 strategies, all very much focused on the technology sector. Our most recent product, more of a crossover product, a global equity with a very heavy bent towards technology and very focused on automation and AI. The key point to this slide is that myself and my partner Nick Evans have been managing this business at Polar Capital since 2007. I joined in 2003, and we have a wonderful team, experienced, broad, everyone looking after different sectors and themes. And I think that's absolutely critical, because the tech sector doesn't stand still. Stocks that we're considering today may not have been listed 2 years ago. Many of the companies that we came to love 5 or 7 years ago will have been discarded in the kind of the waste bin of technology investing, such as the pace of change within tech. So delighted to have such a large team that allows us to sort of explore the universe. When you flick on, you'll see it's a large universe. This is a sector that has, well, 4,000 is our sort of stab at what's available there for us to invest in. But I think more realistically, perhaps high hundreds in terms of names that we're following, that we care about, and themes that matter. And the way that we attack the world is very much a top-down, bottom-up combo, where we look for the most important themes, we look for the best ways to get exposure to those themes, and then obviously we do the work on the companies themselves. We have a particular focus on companies that don't need capital, and we're not very interested in sort of public venture capital as a rule. We care about valuation, but not enough to dissuade us from investing in the best companies. I was a day one investor in Google at the time. I think it came public on a forward PE in the mid-30s. Most people in London that I can recall said it was ridiculously overvalued. And in hindsight, of course, it came public on a forward PE of, I don't know, less than 1 times, just looking a few years out. Now, that's cherry picking, but the point remains that the best growth stocks often look expensive but aren't. And the process ultimately is about making sure that we have the right names in the portfolio. We have 100 odd stocks in the trust, and we sell our losers, which is something that people don't tend to talk about. Within technology, the change occurs at a rapid rate, which means that invariably you will find yourself with less good stocks with better alternatives. And so we will move from those, hopefully, to the best ones. The way that we think about the world reflects the way that the tech sector looks, which is that it often overpromises, underdelivers, and then later delivers and some. And we're seeing that, of course, today with the internet and the cloud, promised in the 90s and saving the world as we speak from the worst of the pandemic. The reason we don't do blue sky investing is because of this idea that ultimately companies overpromise, they raise capital, and then it takes a lot longer for things to happen often than they expect. Things like 3D printing, solar power from the early 2000s, and loads of examples of overpromised, overhyped technologies. We do the work on those areas, but we infrequently invest there. And we focus on this green part of the life cycle, if you like, of the theme, where change is already happening. Valuations may look expensive, but the biggest risk of adoption has already been proven. What we don't do is value invest. So we don't go and buy IBM or Oracle because the shares look cheap. Those companies to us represent last generation winners and very much not what we're looking to invest in today. And if you think about that in the real world, you'll see that that's what change looks like in life. Often things happen much faster than anybody anticipated. Things like AirPods that were launched to derision end up becoming hugely popular, and lots of people wearing them as we speak, doing Zoom calls like this. Likewise, when things go wrong, they go wrong in 2 stages. First gradually, and then very rapidly. Some of the things I'm going to talk about over the course of this presentation will include lots of that. What technology has done to things like cash payments, we've seen already play out in retail, in things like e-commerce. And I think we're going to see a lot more disruption as we come out of the other side of this pandemic. The story of the last decade, of course, is the tech sector, and it's great to hear other people talk about the merits of growth investing on this conference. But in the end, the best place to be as a growth investor is a tech investor. The best growth stories on earth are mostly tech stories. Again, perhaps the other speakers would debate that point, but when you look at global equity earnings, since the great financial crisis, pretty much all of it has been captured. The growth of it has been captured by the US technology sector, and China obviously playing a strong role there too. And so, unlike the late 90s when the tech sector overpromised and underdelivered, this time round, of course, the tech sector has been driven primarily, and its performance has been primarily driven by its earnings prowess. And that's caused an awful environment for value investors for a very long time, principally because the tech sector has continued to, frankly, steal or redistribute their profit pools. Again, I'm going to talk about this a bit more as we go through the deck. The pandemic is much like, war, if you like, that we've all been forced to do the best we can with the situation we find ourselves in. And I'm sure many of us find ourselves in fairly, relatively speaking, at least fortunate positions. Like the war, we got by, and we've got by with technology, haven't we? With cloud computing, with Zoom calls, with homeschooling, and a whole bunch of stuff that will probably not find its way into the history of the pandemic. When people write about the brilliant people at Moderna and elsewhere, they probably will forget to talk about the role played by technology. But in the end, it's been the technology sector, of course, that saved the world. The cloud has saved the world. We've seen a huge amount of companies move their digital transformation efforts, accelerate them. We've seen change really accelerate and broaden across an enormously sort of broad landscape. Next page. And some examples of this, you can see, e-commerce, which was, gradually stealing share from real world commerce, just doubled during the pandemic with shops closed. We've seen cloud grow incredibly against a backdrop of negative GDP. We've seen cloud computing grow in the 30s. We have video conferencing reaching levels that nobody could have imagined 5 years ago. We've seen telemedicine take 10 years of gains in terms of adoption just during the pandemic, and we've seen electric vehicles reach what looked like an inflection point. So huge acceleration across the piece occurring right now. You can see that we're now in a reopening phase, as other speakers have mentioned, and there's been a rotation away from technology stocks. We've seen some valuations certainly come back a bit, consolidate some of our gains, and attention shift to reopening plays, and that's fine. That's the world we're in right now. The thing is, though, that we're not going to reopen back to the old world that we left. And when you read about our foreign travel being curtailed by our Prime Minister potentially, it's just another reminder of the fact that we're not going back to an old template anytime soon, just as we didn't go back to the pre-war template in 1945. The world we're going to open to, of course, is a hybrid world where we work from home, we work in the office, we get the best of two different work modalities. It's going to happen, even if the Goldman Sachs CEO thinks otherwise. And the reason for that is it's really quite good. People like it. 80% of people have enjoyed work from home, despite all of the awfulness associated with lockdown. Only 12% of people want to go back to full-time work in their office. And the latest survey I saw said 72% of people want to work in a hybrid model. And I think after World War II, returning servicemen expected a different deal from the government. And I think we as employees will want a different deal from our bosses, having done an incredible job during lockdown. And I think there's some very profound things that are going to happen here, and most of which benefits my sector hugely. What does this mean? What does hybrid work really mean? It means three things for us. It means less time in the office. This may sound trite, and it probably is. But this isn't great news if you own office buildings. I think it was McKinsey thought that that with less of us coming into the office and more hot desking, companies could save 25 to 30% of their spending on commercial property. It's fascinating to see London shrink for the first time in a very long time. Cities are going through a process of deurbanization. You can work in London, where cities like ours, you can make bigger salaries, on average about 40% more than you would make elsewhere, but property prices are 3 times the price. So why not live somewhere else and commute on those 3 days a week? Of course you will. And 14% of Londoners on a survey I recently read said that they were looking to leave London. Bad news for mass transit, bad news for TfL, bad news for Sadiq Khan. But the reality is bus travel peaked in 2014, and every year that Uber and Lyft are in cities, public transport systems suffer volume declines of 1 to 2% a year. Hybrid work is going to be a disaster for mass transit systems. It's going to be difficult for cities too. Some estimates say that 1/3 of all commuter flow will end in a hybrid world. You're going to have centres of cities hollowed out, tourism permanently impacted, business travel forever changed. Did you know that 40% of all business travel undertaken is internal business travel. That's me visiting another Polar office, or someone from Fidelity visiting another Fidelity office. That's over. No one is going to do that anymore because of Zoom. Conferences and trade shows, $30 billion worth of business in the UK, $1 trillion of value globally look broken in a hybrid world, because we've proved that we don't need to do that during this lockdown period. How about more time at home? What does that mean for us? Well, it means that people will continue to spend on their homes. Home capex has benefited companies like eBay and Wayfair and Zillow. There's not much property available to be bought right now. One of my stockbrokers yesterday told me that there are currently more real estate brokers in America than there are properties for sale. So do what you will with that. But we're going to live smaller lives, more local lives. We're going to take more care about our community. Actually, maybe we're going to see the high streets that we live in cared for more by people in the same way that we've tended our relationships with our neighbours more during lockdown. All of this is great for e-commerce, by the way. It's not bad for tech, it's great. I'm going to be at home more. I can take delivery more. I'm going to waste less time and go to less stores where they don't have things in stock. And I'm going to keep pets, and I'm going to cycle. And we have exposure to all of these themes within our technology portfolio. We own Peloton, the home fitness company. We own Shimano, that's a pure play on cycling. And then finally on work, what does this mean for work? Well, finally, we're going to see the end to a system where, if you like, since computers, we've created information, we've manipulated it in electronic form, but ultimately we've used paper to record things. And that's coming to an end, because in a remote working world, I can't rely on the paper being somewhere else. And so we're going to see waves of tech enablement, automation, digitalization. And over time, we're going to see more and more interactions that we're having like this become digitalized. And when I digitalize this interaction like we're having right now, this information becomes a data set. And that data set can be explored and analyzed, and it can be transcribed, and it can be translated. And we're going to be able to apply AI to it in ways that nobody could possibly imagine. What we're also going to see, I believe, is a productivity boom. When people think about inflation, they don't think about the productivity that's coming through in a hybrid working world. We've only managed 1.4% per annum gains in productivity since 2004. But I believe, like we were in the 90s, we're on the cusp of a boom. There's a real these are some of the companies that we have in the portfolio that play into all of these themes. Many you'll know, hopefully some you won't, but ultimately playing into less office time, more time at home, lots of e-commerce, lots of security companies, and more work, transformed work, automation, and cloud companies. So one case study of this, I think, is just fascinating. So this is telemedicine. Many of you may have used this in order to sort of speak to a doctor at some point during the pandemic, afraid or unable to see them in person. And what's so fascinating about this case study is that it epitomizes everything that we're going to see and the role that technology will play in this next productivity boom. But what it says to me is that we will reduce wasted time. There's a lot of time wasted. We commute, we travel on business that we don't need to do, and we wait. We wait a lot. We don't need to wait anymore. And so, for example, telemedicine, rather than traveling for over an hour or even 2 hours in some cases in the States, you can use an app to contact a doctor, and with a minimal amount of wait time, you can basically solve the problem that you're dealing with or worrying about. You can also save money. It's a lot cheaper to see patients in this way, particularly when they visit emergency departments. The cost savings potentially from telemedicine alone could save the US economy $300 billion a year. It's astonishing, and it's one simple example of how remote work has enabled a technology that could transform the economics of an industry. And just think about this one before we leave the slide. Kaiser Permanente have talked about this, that 70% of all dermatological cases can be solved within 5 minutes, and 40% of all of their patient problems resolved by telemedicine. So this would have taken 10 years for the tech sector to prove, for telemedicine companies like Babylon or Teladoc or Amwell to be able to prove that this was a superior way of delivering healthcare. But the lockdown and a hybrid world has brought that into fruition. And if you think about it, it's just one example. If we went back to the 90s, the tech sector transformed retail, it transformed advertising and video and TV. But now we're on the cusp, I believe, of transforming healthcare, education, transportation, offices, and eliminating paper. In the portfolio, very quickly, the way that we split up the world, we do obviously worry about technology as well as the shape of the world post-pandemic. We have 8 core themes in our portfolio. I won't talk about them at any length, but e-commerce, software as a service, cloud, digital entertainment are 4 of them. Data economy, the idea of capturing data and processing against it. Connectivity, obviously 5G, things like autonomous vehicles and EV, and then things like robotics and payments. And again, we believe that those 8 core themes represent the most important themes on a medium-term basis for us as tech investors to capture within portfolios. I was a few minutes on AI, and then I'll love you and leave you. I think for us, the cloud, the internet has been the general purpose technology that has really begun to re-architect everything. And much like steel or electricity in previous generations, really it's the internet that is the conduit or the backbone of the change that we see in society today. I think as we look forward, our excitement flips to AI, this idea of more interactions being digital, more data being created natively in the cloud, more smartphones, more time spent on smartphones. The data sets are exploding exponentially, and we are beginning to see the fruits of what it means when you analyze that data. We're seeing it in this most critical domain, natural language processing, where 5 minutes ago, a computer trying to recognize voice was pretty bad. The error rates were useless, and it was frankly more of a science experiment than it was anything else. But now we see dramatic progress being made with companies like Microsoft, Google, and others using these new models, these new neural networks to not just recognize words, but be able to complete sentences and be able to reply to questions. And we're beginning to see that actually happen incorporated into things like search engines, voice assistants, and other places already. And we're really still scratching the surface in terms of the processing of the application of NLP, natural language processing. And we're seeing it content creation as well. And anyone who says that computers can't create content, well, I think that time will prove that they can. They already are. They're creating content in things like gaming. We're seeing portraits produced by computers, and we are already seeing prose generated by very large neural networks. And so the point really I'm trying to make here is that as we run out of growth associated with the internet and the cloud, which I don't believe is going to happen anytime soon, given that cloud computing today still represents somewhere in the mid-20s of overall computer workloads and less than 15% of IT spending, I think we've got plenty of years of growth ahead of us. But we can become quite excited about a hybrid world, the digitalization of activities, and the application of AI. So the summary, apologies that I haven't been able to actually see you in person or persons. The tech sector right now is taking a breather. People are looking for sectors that are better, in quotes, ways of playing reopening. We're hugely excited about what reopening means for our sector. The pandemic has proven in a way that nothing else could have possibly proven that there is nothing without technology, that tech is absolutely central to the world that we live in and the world that we're moving into. And as we come out of this reopening period, where I'm sure that celebrations will be very old school in nature, that we will see acceleration, not deceleration, of trends and adoption habits that we've seen during lockdown. And for us, we remain as excited about the technology sector today as we have over, well, certainly my 20-odd years of experience, but certainly we are hugely excited about the outlook for the sector. Thank you, and again, apologies for some of the technical glitches today.